Okay, good morning, folks. Good morning if you're here, of course, in the UK. Good evening if you're listening in from Asia Pacific. Good evening to you. Hopefully you are all well. Welcome to the midweek review here with me, Andrew Lockwood, courtesy of Eightcap and the Trade Corner. So delighted again to be here. This is my fourth time here on a Wednesday. So those of you that do not know, we do this twice a week, Monday and Wednesday, guest speakers throughout the year. I've been honoured with being given the first slot of the year for February. Next month, you'll be having a new guest speaker named Andrew Mitchum from the Forex Trading Coach. So make sure you check into him. But you still got to get through me first. As always, I'm sitting here chatting to you. It's nice to know who I'm chatting to. So if you'd like to engage, maybe just let me know where you are from, where you're listening in from, and also let me know maybe the level of experience you've got. I think this is quite important for these events because obviously we want to make sure that we're pitching it at the right level. So if you can just say hi from wherever you are, and let me know the level of experience that you have. And that will be great. And if you want me to cover anything as well, then please do shout out as well if you want me to look at any particular trading entity, currency pair, or indices or something like that, or commodity. Do let me know and we'll see what we can do. What I'm going to do now, just over the next 30 minutes or so, just have a quick sort of review of what's been going on in the macro picture. That's basically what's been driving the markets, and talking about the news events. And then we'll look at the markets, and I just want to share with you, basically my strategies. I've got no secrets about my strategies, and if you maybe can learn something from those, that's great. I basically just trade two styles of strategy, and I'll go through them now on the charts to see if we can find any setups. A couple of things happening, maybe in a couple of the currency pairs that I am looking at. Okay, we've got Ian Kirk, he's in from Melbourne. He's been trading for a couple of years. Welcome to you. I've also got Raymond Boer is tuning in from the Netherlands, a complete beginner. That's great, nice to know. We've got Midi from France, and we've also got Alessandra from Finland, interested in Forex and commodities. Brilliant. Alessandro, I think if you're trading Forex and commodities, I don't think there's any reason why you should not maybe have a look at indices as well. Indices, I quite like trading indices. You're in Finland, so you're sort of an hour ahead of us, but certainly in the US trading session, sometimes there's some good opportunities in the indices, in the NASDAQ and so forth. So I do think it's worthwhile you having a look at those. We'll kind of look at those later as well. And Troy is in from Australia. So I've got 9 p.m. in Sydney at the moment. So staying up late. Thank you for tuning in. If you want me to look at anything, as I say, do give me a shout. Okay, so before we get to the charts, let's just have a look a little bit about the macro view. For those of you that haven't seen this already, this is the Eightcap economic calendar. It basically tells us the news events that are coming out, and of course the ones that have come out as well. I've been trading on the screens. I've been trading since I left school all those years ago. You can tell it's quite a few years ago. But I've been trading on the screens since about 2005, 2006. I've always been using an economic calendar. In fact, we have our own economic calendar in my own community at the City Traders. However, I'm looking at the Eightcap economic calendar and pretty impressed with what they're dishing out here at the moment. This is free to anyone that has an account with, you don't even have to have a funded account. Anyone that has a portal with Eightcap, you can log into Eightcap and even set up your demo accounts as well in there. Once you get that, then you get this sort of like a little panel thing here. And you'll see here where you can add your accounts and so forth. But if you look down here, you see economic calendar. And I think it's one of the best economic calendars I've seen. I haven't actually spoken to Eightcap yet and how I can maybe import it into our trading room, but I think it would be a quite nice little add-on for my community members as well, because it really is quite a good little economic calendar. So do go and check it out in your own time. Again, it's free for you guys. So just, I won't go through exactly what happened on the screen here or over the week, but let me just tell you briefly what has happened in the bigger picture. And to do that, I just want to show you. Well, no, I'll get to the charts in a moment. But basically, this week it's all been really about dollar strength. Now, those of you that follow the fundamentals will know that the US dollar has really been supported over the last, last 2 or 3 weeks, and we'll look at it in the charts in a moment. Basically, on the back of some really strong data that's coming out of the US in terms of inflation. So basically, we've seen PPI, CPI, retail sales, or all inflation data. It's all basically showing signs that the US economy, which like the rest of the developed world is suffering from really strong inflation, shows you that maybe the market was getting a little bit ahead of itself in terms of expecting the Fed to maybe come off the gas, if you like, on their interest rate hiking cycle. So now the dollar has been strong this week, and it looks as though it's going to end the week strong. We had some strong data out yesterday in the PMI data. We've also got some data out later on Friday, which is inflation. I'll show you that in a second. But basically, the US dollar has been strong. Okay, I'll come to what's on the screen in a second. We've also had the RBNZ last night. That's the Reserve Bank of Australia. They moved their interest rates. We spoke about it on Monday. If you tuned into my event on Monday here with hi Deepak in rugby. We spoke about it on Monday. What we were expecting, the markets were initially going for 50 basis point rise, and then the market was expecting maybe just a 25 basis point rise. I was pretty out there saying that I expected a 50% basis point rise, and the New Zealand dollar would actually do particularly well. As luck would have it, that's exactly what's happened. They raised their interest rates by 50 basis points yesterday, but they actually followed that on with some hawkish tones. Hawkish basically means upward pressure on interest rates, like bullish. Dovish is the opposite. That's downward pressure on interest rates. Hawkish and dovish are terms we use and relevant to interest rates, as opposed to bullish and bearish buying and selling. So they came up with a nice 50 basis point rise, and basically saying there's more to happen, more to come, if indeed they need to. So quite a hawkish statement from the RBNZ, which is why the New Zealand dollar is performing quite well. And also yesterday, we had some PMI data out of the UK. Okay, so PMI data stands for Purchasing Managers Index. It's one of the leading indicators that the central bankers look at. It's basically a survey where they ask all the business leaders and what are their sort of outlook for the economy going forward? Are they hiring more staff? Are they investing in machinery, plant, and so forth? So it's like a forward-looking indicator. Central banks love it. Some very strong PMI data came out of the UK, which is basically really put a bit of a fuel under sterling. So pound is performing again reasonably well this week. So basically, the star performers this week have been the pound, the dollar, and the New Zealand. Well, we'll get on to the charts in a minute to see exactly how they are performing. Okay, so this week, today, we've got the FOMC minutes on the screen here. Okay, so FOMC stands for the Federal Open Market Committee. It basically is all the central banks meet every month to decide on interest rates. This is the minutes of their meeting. Okay, the last time they met, they increased interest rates by 25 basis points. But we like to see what they're thinking to give us forward guidance of what they're thinking down the line. Now, if they, and undoubtedly I think they will, they'll be talking about, the story is not over yet. The inflation story is still very much there, and they're going to be data dependent. The market was getting ahead of itself in terms of pausing interest rate hikes. If they talk about data, well, they only have to look at last week's data to realize that they're not pausing anytime soon. So that I can only think of as being a reasonably bullish for the dollar tonight. It comes out at 7 o'clock London time, which is 7 o'clock London time, which is going to be 6 a.m. if you're in Sydney. There you are. So keep an eye on that. Then we also do have the Governor Orr, RBNZ Governor Orr, speaking as well tonight about the same time. Keep an eye on that. They've just moved their interest rates. They were hawkish. He's going to be hawkish. Keep an eye on that. And then you've got some Fed speakers as well. It's deemed to be high impact news, the FOMC. Fed Williams is medium. So, you know, I don't always rely on these sort of impact bars, but I think this is a medium impact to see what he's got to say. Not a lot out on Thursday. You can just drop it down to Thursday by going there and scrolling across. You can see, do this in your own time. You've got a rate decision in what's that, Turkey. You've got some GDP numbers out of the US. Yes, we do look at GDP, so we will be looking at that tomorrow. So that's an important one. GDP is basically the health of the economy going forward and so forth. How is it looking? Strong economy, upward pressure on interest rates. Normally, you'd expect to see the dollar go stronger on higher numbers, and that's most probably will happen again. So keep an eye on that this week. You've got the weekly job numbers as well, so we pay attention to that. But I think what's important this week for the rest of the week, just so you can jot it in your calendar, is on Friday. Okay, you've got the Bank of Japan governor speaking. We do need to pay attention to that. Okay, this is the new governor of the Bank of Japan. Well, he's going to be the new governor. He's the nominee at the moment. But you know, he's a bit of an unknown. He's a bit of an unknown animal, Ueda. So this will be like the first speech that he's giving in terms of, you know, his forward-looking policy. As you may know, the Japanese yen has been over the last couple of years, or well, 10 years actually. But the Japanese yen has been, you know, soft because of the low interest rate policy that they have adopted. And there is talk now, there's sort of speculation that the low interest rate policy that has been lower than any of the other developed countries, that's going to have to change at some point. Inflation's, you know, it's rearing its head there as well. Finally, wage growth has all been cited this week as sort of, you know, positive signs for Japan. Again, there's talk that the Japanese will maybe start lifting their interest rates. We want to see what he's got to say about it. What his line of thinking is, forward guidance. The Japanese currency could do well, start performing better, indeed, if that happens. You know, we've had some big moves in the Japanese yen to the downside, although it's put up a little bit of a bid recently. If you look at the dollar yen. Anyway, but it's also importantly on Friday, we've got core personal consumption and expenditure. It's deemed here as medium impact news. I think you want to pay a little bit more attention to medium impact. I think it's more likely to be high impact news personally. It's an inflation number that basically is centers around you know, the personal, that's you and I, you know, what your consumption is like, how's it affecting our consumption, the inflation and so forth. So it's like an inflation number. And one of the reasons why I like the Eightcap presentation of these data releases is because of the data it gives you around it as well. So you can actually look down and see exactly what it's been affecting in the past. There you go. You got the charts. You can see how it's gauging in the past. So a nice piece of sort of historical information that you can grab your teeth into there. Right. Okay. So if anyone wants me to look at anything in particular, as I say, do let me know. Be good to hear you know, some feedback from you, anything that is important to you. Okay, so again, for those of you that have followed me over the past will know that one of the biggest reasons why I came into Forex many years ago when I left the city, I used to be a city trader, hence the city traders, I guess. But I was one of the original city traders in London since I left school, working for the investment banks in the trading pits. So you've got my coloured jackets behind you there. But one of the reasons why I came into Forex many years ago, you know, I came onto the screens before I lost a lot of money in 2005 when I first came onto the screens, doing things completely wrong. But I basically sort of, you know, came to sort of the thought that I had to really just boil it all down to simple pit style trading. And the pit style trading was when everyone shouted buy them, buy them, buy them, I was buying, and everyone shouted sold, sold, sold. You know, I was selling. You know, I wasn't going to stand in front of Goldman Sachs or Merrill Lynch. I was basically doing what they're doing. And I basically sort of got this coded up for me many years ago on MT4. Actually, this is now a version we've had done on TradingView. But it basically tells me where the money is going. Okay, it tells me where people are buying and where people are selling. And as I mentioned to you a moment ago, if you take it out to the daily chart, it takes you out, to the daily here. You'll see where the money is flowing. So this white line, it's the British pound. I told you, PMI data, strong for the pound. This green line, I've colored it green for the greenback. It's showing strength. Dollar is strong, pound is strong. And you've also got the New Zealand. The New Zealand is edging higher. I told you they moved the interest rates. You see this grey line here. New Zealand is getting slightly stronger. Certainly, Australia dollar is looking weak. Okay, so selling. Alessandro, but the Australian dollar at the moment is under pressure. So, as a trend follower, I want to buy the currencies that are being bought, and I want to sell the currencies that are being sold. You'll notice here, I didn't mention it on my sort of economic recap there, but the purple line here is the Canadian dollar. They had inflation data out yesterday, which came in slightly less than expected. Remember, Bank of Canada have already said that they are going to be pausing on their rate hiking cycle for now. And that is in line with their sort of view that interest rates maybe are going to pause at this level. There'll be no more hikes for now, and that lower inflation read yesterday supports that. So the Canadian dollar is under pressure. So remember, I want to buy high. I want to not buy high. I want to buy strong, and I want to sell weak. You never want to buy high. You want to buy low and sell high. But I want to buy the stronger currencies and sell the weaker currencies. Okay, let's have a quick look then at the DXY. So this is the dollar index. The dollar index is the basket of 6 currencies against the US dollar. Okay, and I will tell you now that the dollar over, say, on Monday, we put in this bearish pattern. This showed you some dollar weakness potentially. Okay, dollar weakness could have driven this back down here. In fact, it was part of one of our sort of views. If we broke out of the Friday's low, we would have, the Monday's low, we would have seen a follow through down. That hasn't had the follow through. Dollar is now showing strength. Dollar is now pushing up against the basket of currencies in the run up to the FOMC. How much further it can go, I don't know. I've got a level of resistance in here at 104.50 on the index, which is basically this sort of band here. If you're looking left to the lows of that big sort of swing high, you'll see it bounce off it there all the way up to 106. You had this bearish pattern in the sort of mid-center zone of that. So the 104.50 level is closing in on it. Okay, so the dollar is trading strong, but it is trading strong into a level of resistance. And I always say to my traders in our community, if you're trading on the lower time frame charts, on the 15-minute chart, on the 1 hour chart, you need to be aware of these levels, because you don't want to be buying straight into these levels. There's 3 trades you can make when you're trading. You can buy it, you can sell it, or you can do nothing. And if you're trading on a lower time frame charts with a bias of dollar strength, be aware of this level that we're coming into at the moment, on the lower time frame charts. Sure, the higher time frame charts, maybe there's more mileage to the upside, but I don't know much more that the Fed can do than they've already said. I think what's happened here, this correction that you've seen, yeah, we've had a bit of strong data, but this correction started before the strong data came out. The strong data's only been out for the last couple of weeks. Remember, last week really. But the move started pushing higher at the beginning of February, and it basically pushed higher on the back of the markets basically correcting themselves. But the Fed have been telling us, that we're not, that we're not going to be, pausing too quickly for a long time. The market only just sort of woke up to it at the beginning of February. I don't know much more that the Fed can do today to drive this any higher, bearing in mind the other currencies. Remember, this is pitched against other currencies, bearing in mind what the other currencies are doing. Because Forex is 2-dimensional, you're buying one, you're selling the other. Or the others are all strong as well. The others are all moving in interest rates. So how much more higher can this go? I don't know. Again, if it breaks through the Monday's low, which was down at 103.70, only 50 pips from here. If it breaks through here today, then you can see, I think, further capitulation all the way back down. But we haven't happened there at the moment. Okay, so the dollar is reasonably strong. I want to talk a little bit about and then we look at the other indexes as well for the different currencies. that you can trade. Okay, so one of the strategies that I like to, well, I trade two strategies. I said I'll open up my bag of my strategy bag to you. No secrets in what I do. I've been talking about them for many years. I basically use a trend following strategy on the intraday timeframes. So back in the day when I wasn't running city traders and I was had more time and I was just sitting here trading all day long, I would be on the lower time frame charts, and the 5 and 15 minute and the 1 hour charts and so forth. I have less time to do that these days, but it still doesn't mean it is not a successful and profitable time zones if you know what you're doing and you've got discipline. It's all about discipline, of course. So that's my intraday. I sort of like follow trends, but on the higher time frame charts, I go for the counter trend, and I go for the counter trend on what I call naked trading setups. And naked trading setups, I call them naked purely because they don't rely on any indicators. We take out all the indicators, just looking at the pure price action, looking for bullish engulfers and bearish engulfers at levels of support and resistance. You see here on the Australian against the New Zealand dollar, we had this bearish pattern at the previous level of resistance, and it rolled back. We're seeing not the bearish pattern up here at the moment, so there's no naked trade, but this has got my focus on trend continuation. The moment the trend on the lower time frame charts is clearly down. This is how I set my charts up. Okay, so I have the higher time frame on the bottom. I have the medium time frame here. This is the 4 hour chart, and then I have the 1 hour chart here. Let me just put on the watermarks for you so you can see exactly what we're looking at. So at the moment we are in a downtrend. We've broken into downtrend since we hit that previous peak. So I'm looking at the lower time frame charts. This is a classic. The reason why I wanted to point out this, because this is the pattern I want to show you, which is just a very. I rely on this. I mean, I have them. I'm so. Where is it? I have all these sort of done for me. I don't know where it is now, but I have all these sort of like laminated for me, my patterns. Oh, here we are. Look. So I have them all sort of like written out for me. I just keep them on there. I'm ticking them off when I see them. And I've been doing this for many years, but I still want to see them, and I still want to confirm that they're in tune. This is the perfect little pullback. Okay, this type of pullback there is a strategy that I will be trading all day long once I've confirmed the higher time frame trend. It's very simple. Look, some of them lose and some of them make. You know, more than for me, make them do. I confirm on the higher time frame. First thing I do is confirm the higher time frame that I'm not coming into any roadblock resistance. So roadblock resistance for me would be down to 108.70. 108.70, well, I beg your pardon, yeah, 108.70 is the next level that I need to be cautious of, where we could potentially see a bounce. Okay, so once I have that put into my lower time frames, it keeps me out of trading. Remember, I said you can trade long, you can trade short, you can do nothing. Okay, so trading to the short side is right, or 108.70, you can set it up here on MT4, so it basically covers it across. So basically I've got profit targets back down at around that zone down there at the moment. It gives me a lovely risk reward trade. Okay, I've got the trend. You can do this. This will work on the, it mostly works on the 1 hour as well, to be honest. Yeah, it mostly works on the 1 hour as well. You've got a nice pullback on the 1 hour. It looks quite nice on the 1 hour, to be honest. You've got big, the 1 hour actually is even better. Remember, if you're trading the high time frame charts, you've got a bigger stops and bigger profit targets, of course. Okay, that's a big zone we've broken through. Yeah, looking at this 1 hour support zone, bounced off it a number of times, sort of like mid-February. We've broken through, and now we've come back to retest. So I quite like it on the 1 hour as well, but just on the 15-minute chart, you've got a potential trade out. I don't want you going off and trading this now. I'm just giving you my strategy. You can spot these on all the different trading charts you want to look at. Just go out looking for these. You need to spot your levels of massive support and resistance that you're not going to trade into. Yeah, that's when you're going to sit on your hands and do nothing. Biggest challenge when traders come into the markets is doing nothing. If you've got a roadblock resistance or support, you don't trade. At the moment, I've got fresh air to the downside. this is a pattern. That is the pattern I want you to look at. Well, it's up to you whether you look at it or not. This is the pattern that I teach to my it's very simple to my followers. It's just a basic pullback pattern. Okay, pulling back into previous swing low, acting as support. Beg your pardon, acting as previous support, acts as resistance. Your stop is above the swing high. Your profit target potentially could be a 1-to-1, or you could start trading it down lower. And of course, if you're wrong, you get out of the trade, you wait for the next setup. You don't have to be rocket science. You don't need all the, the technical indicators that a lot of traders use. It just basically is price, just displayed in a different way. Excuse me. But that type of pattern happens all the time. Love it. You can look for that. I think there's one there's one here in the Aussie yen as well. Okay, so let's do the same analysis on the Aussie yen. Aussie yen. This is very much like the New Zealand yen, isn't it? Okay, we are in a downtrend. We've rolled off this double top. 4-hour trend is to the downside. What is my level of resistance? You don't want to put so many support. I mean, you don't want to put so many levels of support in that you don't get a trade off. But I think this is good to go. This is good to go all the way down to, I would say we're okay on this one, all the way down to 90.5. 90.5 is my next level that I would be looking to take profits. Okay, that's about 150 pips from now. Okay, so once I've established my profit zone, yeah, I don't want to be trading right into this big support profit zone. You can drop your line in there. I was messing around with my I can put that on all, apply to all. There we go. I can't do it now, but you can apply this to all, so it appears on your 15-minute chart as well. And there you go. There's the pattern. Yep, there is your pattern. Same pattern. Impulsive move. There's your pattern. Impulsive move. Pulls back. Previous level. There's your pattern. Okay, you need your stops up there. So you've got a 30, 40, don't do it 3 pips above or 3 pips below. 3 pips above, 3 pips below. Give it room. Yeah. Doesn't matter if it's 5 pips, 8 pips. Your position sizing. So that you're not risking any more than the predetermined amount. I'm just investing in one. I don't want to trade these, by the way. I've just got this delivered to me. I think this is brilliant. I haven't seen this. Just playing with it at the moment. It's called Magic Keys. Brilliant for all this position sizing. And I've got my own trading tool that I coded up for city traders. I must admit, I think it's almost better than what I've got. Yeah, it does all this risk thing for you. Anyway, yeah, so nice little setup there in the Aussie yen. Okay, I mean, you use the momentum meter to show you that the Aussie is weak. Looking for the stronger currencies. What about pound Aussie? Should we look at pound Aussie? Is there something in pound Aussie? It might be something in pound Aussie. Okay. So pound Aussie. So pound Aussie for me, I'll start that drawing again, shall I? Pound Aussie for me. I mean, there's a double top. I don't like this one as much, and most people wouldn't be taking it. But my entry for pound Aussie would be there. Okay, so I would wait for the pullback to get down to 76.70, which is another 40 pips or so. And I'd also want to watch it how it gets down there, because that's a significant little pullback. So I don't mind, again, I don't mind maybe not taking trades. It's not the best one. You remember, when you're trading, you should only be taking the high probability trade setups. It's most probably not a bad zone to be buying into, the peak up here and the base down here. But the fact that you may, well, put it like this: if I was to sell this, you know, because this is, you know, this pattern up here on the daily is this is a lot of bearish engulfing at the previous level of resistance. I don't trade these nakeds, by the way, on the lower time frames, but this is a bearish short pattern. If I was to trade this to the short side, my shorts would be here, my profit targets would be in here. So my profit targets would be in here. That's where, which I'm not short it, but if you're not short it, that's where you could maybe consider buying it. Okay, for that, let's have a look at euro pound. No, nothing in euro pound. I tell you what I want to look at in the euro pound. Remember I said to you about my naked trading setup for the longer time period. This is what I look for on the high time. So this is the daily chart. Now, for those of you that have day jobs and are only able to trade, you know, for limited time throughout the day, this is a great strategy. Again, no secrets on this strategy. I can tell you exactly what we're looking for. We draw our support and resistance in using line chart to avoid the wicks, avoid the highs, and avoid the lows. So I basically go to a line chart, put in my levels, looking for the big turning points. You'll see the big A's and the big V's as my levels. Okay, profit targets would be basically back down here. That's how you draw your line. That's how you draw your support and resistance, guys. On the daily, this is, you know, just the closing price, which is why we ignore these wicks, and then you can go back to the candlestick. And oops, daisy. And then you go back to the candlestick, as he says. So this type of pattern here, I've got it drawn in. I think we were talking about this in my own trading room. This type of pattern here, level of resistance, bearish engulfing pattern. It shows you that the sellers, that's not you and I'm talking about the institutional sellers, you know, the big players. You and I, does anyone know what percentage we make up of this market? Do you know what it is? Anyone give me a suggestion? The percentage, here's the question. The percentage of the Forex market, which we know is $7 trillion, what percentage is made up by retail traders, guys and girls sitting at home on their workstations or in trading rooms, small trading rooms? What do you think it is? I'll tell you in a second. So this is the institution that is basically is moving this. It's respecting this zone. It's looking at this level as resistance. It's pushing it lower. So we take this trade all day long in our trading room. 10%, 5%. Deepak says 10%. Raman says 5%. Mehdi says 0.1%. Yeah, it's peanuts. It is peanuts. Mehdi. 1 to 2% says Troy. 10% says Raman. I tell you, it's 5.5%. That's the last time I got a broker report on that. I don't know if it's that accurate, but it's fair to say, Raymond, that 10% is maybe a bit high. It's about 5%, so not a lot. We don't move this market. Okay, what's moving this market is the retail, are the institutions and the, you know, and the big players. Fund managers that need to buy currencies to invest in certain, you know, if they want to invest in billions in certain, you know, economies, then obviously they need to buy that, you know, country as well. I mean, so it's not just the guys sitting there watching candlestick charts. There are other players that are moving these markets, people that need to buy a currency because they need to invest in that country. Those are moving the markets. It's not just the currency traders sitting on desks. You know, and they're moving this lower, and that type of price pattern tells you exactly what's happening. I developed this strategy from my days in the trading pits because, as I said to you, I lost a lot of money when I came onto the screens. You know, and this strategy came from, I noticed something when I was in the trading pits. When the noise of the pits increased, you know, you hear bah, bah, and the noise levels increased. It used to be quite loud, certainly if you're standing in the middle of a trading pit. And that normally meant something was happening. You didn't normally get a noisy trading pit when the markets were just buying and selling. Yeah, it normally meant the markets were moving in one particular direction. And there was a guy who was older than us at the time, and I say older than us, this will make some of you laugh. He was older than us. He was in his, maybe he's 35, 40. We were in our young sort of 20s, and you know, the young guns of traders, and this sort of older guy. He didn't wear a jacket like that. He just wore his suit jacket. He wore his suit jacket with his different ties to match his different Rolexes. He was a big shot. His name's Alan. I won't go into his second name. But normally when the markets had all this noise and the market started to quieten down and dissipate, the noise levels lessened, Alan would walk into the pit and just go completely the opposite direction of what the market had done or where it had come from. And more often than not, he was standing there for a couple of minutes, sold. He walked out and bought himself another yacht, I would have thought. That's where I developed this trading strategy from. Basically, it tells me that the end of a trend, when it does want to reverse, the moves can be quite big. And this type of price pattern basically showed me exactly where Alan would be walking into the trading pit. And it worked out very well. So yeah, so this sort of basic pattern up there. When you see these at levels of support and resistance, they can be good for turning points. I'm running out of time here now, but you've got the idea. See if you can find another quick one that we may be looking at today. CAD's looking weak. Aussie, what about dollar CAD? I don't know if there's a pullback, but the dollar CAD is most probably not a bad little trade. We've broken out, this is the daily, broken out the level of what's got to be considered resistance. I've got it drawn in here already. I do all of my sort of levels normally on a Sunday if the kids don't distract me. So I look at that now, looking at the 4-hour chart. So you top-down analysis, moving down to the lower time frames as you go to build the picture. Okay, so this is the dollar CAD. I've taken out the level of resistance. Where's my next level? I'm good to 36.80. Yeah. So I'm just going, I know I'm hopping around here, but let me just go back to the daily chart. So I'm all over the place. Let's just go back to the daily. I'm good to my next level. Where's my next level? It's going to be up here. These peaks up here. 36.80 is my next level of something. I think, oh, are we going to get through there? Possibly into that band there. You've got that double peak up there. So that's my next level. So I'm good to that level. 36.80. So then I'm looking at my lower time frame charts. Just drop that back to the candlesticks and then we'll wrap it up. 36.80 lower time frame charts. I'm looking to enter that. Well, unfortunately, it looks like I've missed this one already. But because I missed it because I was having a look here, but moves higher. It pulls back this pin bar, this doji candle there, pulled back to there, and boom, look at that little candle there, that bullish candle right at the previous high to take it higher. It stops below there, your trend continuation higher. Simple pattern, happens time and time again. Yeah. Old support becomes resistance, old resistance becomes support. Okay, folks, that's just basically a little bit of a summary of what I'm thinking at. The dollar is strong at the moment. The pound is looking strong. Australian is looking weak. New Zealand is looking reasonably strong. Canadian dollar is under pressure. Euro is actually not doing too badly. So the euro may have some opportunities. Certainly, if the dollar wants to find this level of resistance that you're seeing coming up in the DXY, then you may see the euro push higher as well. And that's my two little strategies that I like to trade. One is a 10 minutes a day, end of day, working for those big turning points. And the other one is intraday, lower time frames, spot your trend, spot the your roadblock resistance or support, i.e. your profit targets, that area, drill down to the lower time frame charts, look to enter on price pullback into previous structure. Simple as that. You don't need all the technical indicators. I hope you found me, hopefully you found me useful over the last 4 weeks or so. Doing this on a Monday and Wednesday, it's been an absolute pleasure for me, courtesy of Eightcap. Hopefully they have me back at some point. But next week, you're going to be blessed with a guy from New Zealand. His name is Andrew Mitchum. He will be coming on. He's in New Zealand. He runs the Forex Trading Coach company. And because of the time difference, he'll be coming on at 5 a.m. UK time, which is sort of 6 a.m. in Finland. And that's going to be like 6. That is going to, I don't know what it is in New Zealand, but in Sydney, it's going to be 4 p.m. I think. Maybe they can correct me if I'm wrong on that. 4 p.m. Australia time. Andrew Mitchum's going to be on from the Forex Trading Coach. He's going to be doing Mondays and Wednesdays as well. I'm looking forward to watching him, although I will be watching it from a beach in Thailand, but I will be there nonetheless, watching him. So thanks for tuning in. It's been a pleasure working with you over the last month, I should say. Good luck with your trading, and be safe. Again, if you want to get hold of me at any time, you can do so via Eightcap, of course, or I do set up and run the City Traders. We have a trading community. We have a prop firm as well. So I basically fund traders. Anyone that's looking to get funding, you can prove you can trade. If you can't trade, we can teach you as well. But if you can prove you can trade, then we will fund you, courtesy of Eightcap. So I partnership with Eightcap. So we use Eightcap as our preferred broker. So you sign up with us, you get an Eightcap account. You prove you can trade. I'll drop in anything from 12.5 up to $500,000 on your trading account. We've got very simple, easy to follow trading rules designed to get you to pass. I want to fund traders. If you haven't got a clue about trading, that's also not a problem. We do also teach you how to trade should you be that way inclined. You can see us there on all the socials, the City Traders, www.thecitytraders.com. If that's not your thing, that is not a problem. Enjoy Andrew Mitchum for the next month and stay safe.